Good morning, and once again, welcome to the Haven Financial Group radio show. I'm Larry Kulvig, founder and CEO of the Haven Financial Group. Lance Larson, our CPA on staff at Haven, is with us today. Kim, we're going to talk a lot about taxes. Yep, brace yourself for a tax discussion on this show, Kim.
Well, nobody really likes to talk about taxes, Larry, except Lance.
I know.
So it's a good thing we've got Lance with us today. And it's an important topic, that is for certain. And here we are in the fourth quarter of 2025. Wow, where did 2025 go? That's hard to believe. So, it is that time of year where we all start to think about what we need to do toward the end of the year when it comes to taxes. Let's take a look at what we're going to cover in today's show. First off, Lance, great to have you with us like always. We are going to talk about retirement tax strategies. We'll start with taxation of your Social Security, which is such an important topic to everyone who's listening to us who is in those retirement years. Understanding tax treatment of 401ks as well as IRAs. We're going to talk about how is your home sale taxed? And finally, we'll wrap up today with tax strategies that come with opportunities and, of course, also come with risks. So a great show today, Larry. I'm looking forward to it.
Yeah, it is a discussion that, again, nobody wants to have a discussion on taxes, but we have said many times, we are very much forward-thinking tax planners at Haven Financial Group because we're dealing with retirement planning and those that are in retirement. And for many folks, taxes can be affected more than any other time in their life. So it's important to address it, to minimize taxes where we can, and we're going to have a lot of discussion here in these four segments.
Lance, am I right when I'm saying here we come into the fourth quarter and this is a really important tax time?
Yes, Kim. So fourth quarter is typically where we do a lot of the planning and year-end moves. We have 3 quarters in the book, so we kind of know where we're sitting at. It's pretty easy to project out this last quarter to know where we're going to be at the end of the year and see if there's any opportunities that we can do any type of money moves, whether it's doing Roth conversions, if we need to pay a little bit more in so we don't hit those underpayment penalties. This is the time that we start trying to figure all those questions out.
Mm-hmm. Before we get started talking about the actual topics, Larry, I'm sure there's some people who are listening right now going, oh, well, I don't really need to listen to this show because I have a tax guy. And I'll be dropping my stuff off on the 15th of April and I'll see him on the, 23rd with my return or whatever it is, You don't see it that way. And I know you said you're forward thinkers, but will you just elaborate on that just a little bit more?
Yes, because what we hear often, and it's just the way that things are these days, is, well, we don't even talk to or see our tax preparer. Now, tax preparer and tax planning are very different. So it's become a drop-off, pickup, get the taxes prepared. Here, I'll cut you a check. And there's no tax discussions whatsoever. And that may lead to gripes like, oh, my goodness, every year I owe money. I just don't know why. And because there's no discussion, there's nothing ever gets fixed. And so by discussing these things, as Lance will mention, throughout the course of the year, and you adhere to the tax plan, well, tax preparation is easy. There's no surprises. And believe it or not, you can actually leave Lance's office with a smile on your face because bingo, it's exactly what you thought was going to happen.
Terrific. All right. So having said that, let's take a look at some of the strategies that you might need to think about. Maybe you've never thought about, maybe your tax preparer has never thought about it, that may save you some money or make your life a lot better. Let's start with this idea of taxation and Social Security. Lance, I think a lot of people think that Social Security just comes and they deposit that check and Uncle Sam doesn't get any part of that.
Well, Kim, for the most part, there's a lot of people out there that is actually true. And that is because they are just living on their Social Security and that's all they have. And so in cases like that, it is true that they just get their Social Security check, put it in the bank, and Uncle Sam doesn't get anything out of that. But more and more what we're seeing is that people have saved outside of Social Security so that they have their 401k plans, that they have other income streams that are coming in, whether it may be from a rental property or a family farm or something else that's going on. And all this other income that's going to come into their household it's going to affect how their Social Security is taxed. One of the things that for Social Security that people don't know about is that up to 85% of your benefit is going to be taxable based upon how much other income you have. And so when you don't have a lot of other income, not much of that Social Security is taxed. But when you do have a lot of other income, whether it is from that 401k or an IRA, doing a Roth conversion, then we have to deal with how much of that Social Security is going to be taxed.
Okay, so let's talk about that income threshold.
So there is a calculation that we do. And so the way that Social Security works at is we either take 85% of your benefit, or this calculation where we take half of the benefit plus all your other income to get a number we call provisional income. Then we use that number and we put it on provisional income brackets there, which are different than the tax brackets. So for married filing jointly, those brackets are at $32,000 and $44,000. Up to the $32,000, all that is at zero. Between 32 and 44 is 50%, and anything that's above that 44,000 is 85%. And then we sum up all those numbers there to figure out how much is that number for provisional income of taxable, and compare that to that 85% threshold of your gross benefits, and we take the lesser of.
Okay. What if you're drawing Social Security from a spouse that you've lost, or if it's you're a survivor, or is that taxed the same way?
It is.
Okay.
So we have people who will get Social Security in a variety of different ways, whether you collect it on your own benefit for your own retirement. You can be collecting off of a ex-spouse. You can claim it off of a deceased spouse. Children actually can receive it when they're minors from their parents. And it is all going to be taxed the same way. We'll pick on the kids because it's really easy. And most of them don't even have a job because they're minors. So their calculation, what they look at is how much other taxable income they have. Well, it's zero. And so because of that, when we look at their taxable Social Security, it's going to be very, very minimal.
Okay. All right. Does the way that you're filing your taxes, so if you're single and you're drawing Social Security, does that make any difference?
It does as well. So earlier I said that for the married filing jointly, the provisional income brackets were at 32 and 44. For singles, it's actually a little bit lower. The first threshold is at 25 and that second threshold is at 34. So if you have a married couple, they typically will be bringing in about $70,000, $80,000 on average for cash coming in to pay for all their bills. Well, if most of that's Social Security, then that's not going to be that taxable. Whereas if you have a single person, in order to pay for the same things, maybe they don't need 80,000, but they definitely need probably about 60. Well, they don't have quite the same amount of Social Security that comes in, so they have to have more outside sources, which then is going to make their Social Security more taxable than it would for their married counterparts.
Are there ways to minimize these taxes, though? There's strategies, right?
There are strategies. The biggest one is we want to live in a state that actually doesn't tax Social Security. Okay. Minnesota took some great strides a couple years ago, where beforehand they just had a very small subtraction on the Minnesota return, that if it was taxable on the Fed side, Minnesota said we're taxing it as well, minus maybe about $5,000. Well, then Minnesota a couple of years ago changed it. It says, hey, you know what? For your single people, if your adjusted gross income was under $78,000, no matter how much taxable Social Security that you had, just take it all away. And so Minnesota, again, made great strides to help reduce the taxability of the Social Security at the state level. Unfortunately for the feds, it is what it is right there. What we talked about right now, the buzzwords out there is with that big, beautiful bill. Oh, the politicians have now made our Social Security not taxable. Well, unfortunately, that's not quite true. What they did was actually gave us an extra deduction to help relieve some of the taxability of the of the Social Security. But the same calculations that we have done for the last many years, it's still the same thing. So if you had the same situation that you did this year as you did last year, you can bet that you're going to have the same amount of taxable Social Security. It's just now you're going to have an extra deduction, which is supposed to be used against that.
Offsetting it. Mm-hmm.
So,
Lance
Kim,
Larson.
I think a good takeaway from this segment is if you have questions on taxation of Social Security, which is the real deal, or maybe you don't know when to take Social Security, or does it make sense? It's precisely why we teach a Social Security and tax class, several every month in various areas of the libraries, community centers. You can go to our havenfinancialgroup.com and see all these classes. We're big into the education, and Social Security is one decision that shouldn't be taken lightly. It's the biggest income stream for retired Americans. And a lot of times people just turn it on at 62, almost 70% of Americans actually, and 1 to 2 wait till age 70. What is the right age for you? Come on in and visit with us, or simply give us a call and we can have that conversation. I think it'd be very beneficial.
Absolutely. 612-504-8400 is the number. That's how you set up a meeting with the folks at Haven Financial Group. Sit down to talk to them about your Social Security, whether it's about the taxation of your Social Security, or as Larry just mentioned, what would be most beneficial for you when it comes to drawing your Social Security. You can also sit down and talk to them about a variety of retirement issues. We're going to continue, however, today, the conversation about taxes. When we come back, we're going to talk about understanding tax treatment of 401ks and the IRAs that you own. That's coming up next right here on the Haven Financial Group Radio Show.